Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. And of course, we will get you all the queries answered from our top market experts with respect to the markets and various moving parts there as well. Let me quickly look at how the markets are trading. Of course, we've had spaces of green ticks throughout the course of the session, but right now we are drifting lower yet again. You can see 25,063 or mark on the Nifty. That's a 26 point of a dip right now. So it's been choppy throughout the course of the day after yesterday's gains. It looks like, we are again finding it difficult on the Nifty to continue to stand the momentum that we gained yesterday. Among the sectors also, all the sectors have now drifted lower, barring the financial services sector that's holding with minor gains at this point, flat with a positive bias. But despite India VIX also being lower by about 3.5%, most of the sectors are actually down. It's the media stocks that have slipped 2% lower in trade. This also has to do with Zee Entertainment earnings and the reaction there that has come in. PSU banks have slipped 1.5%. Real estate is down by over 1%. Pharma, auto, that's also dragged quite a bit. You can see even the mid and the small cap spaces which are down, and the infra IT names that are also dragging in trade as of now. Let me look at the top movers on the Nifty. Eternal has continued on its top spot right from the word go on the D Street today. Now over a 10% uptick, holding at about 300 odd levels. HDFC Life has pulled up now. Titan Company is also doing well at this point. We're also looking at Hindalco, Maruti, HUL, ICICI Bank as among the top movers. On the downside, Shriram Finance, that's lower. Adani Ports is also cracking by 2%. Jio Financial Services, Eicher Motors, these are the pockets that are still holding lower in trade. In the F&O space, apart from Eternal, there's Info Edge that's also pulled up 4% higher. Of course, buoyed by Zomato's earnings. And that's pulled up the stock because it has a substantial stake in Eternal as well. Angel One, Havells, 197 Communication, these are all the stocks that are also moving up in trade as of now. When we look at the stocks within the F&O that are dragging, 361 WAM, Aarti Industries, IRFC, Granules, Samvardhan Motherson. These are the top drags at this point. Let me welcome our guest on board. Mr. Kranthi Bathini joins in. He's the Director of Research at WealthMills Securities. Mr. Bathini, warm welcome. Good to have you with us. Well, first up, what do you make of the market momentum which continues on a very choppy trajectory? What would you advise investors at this point?
Yes, actually, the consolidation phase of the market has been continuing. But one positive thing for the market in the medium to short term is Nifty could able to decisively hold the range of 25,000 for Nifty, which is a sentimental and a strong support zone. It could able to sustain this level of 25,000. So as long as the Nifty is above 25,000 level, the medium to short term market trajectory is in a positive trajectory. Just market has been waiting for some kind of a positive news. It can come in terms of the earnings. That's where some kind of a lukewarm response the market is getting, and also the global uncertainty like the trade deal and all that has been creating some kind of a limbo on the markets. So market has been in a consolidation phase. This phase might continue till the time we get some outcome about the trade deal, the US is concerned. And with respect to the large cap earnings are concerned, we have witnessed some kind of a positive earnings from the banking and financial services. Uh, but the remaining earnings of the company from the large cap space has been not enticing the market at this point of time. That was the key reason for this kind of a lukewarm and a consolidation phase is going on in the market at this point of time, actually. But
Okay.
what we can sense, as you rightly mentioned, the stock specific actions still remain going in the market. Sectoral rotation and the leadership rotation is missing in this market at this point of time.
Yes. Let's talk about those specific stock moves, Mr. Bathini, and try to understand your view on those. Eternal, Zomato that started off its rally yesterday after the earnings, a 7% move yesterday, another 11% move today, and record high levels also being seen in the trade session today as well. Now, this is despite mixed set of earnings that have come in. Overall profitability has dipped by 90% year on year, but still the stock has actually moved up in trade, probably buoyed by Blinkit's narrowing of losses and revenues superseding food delivery revenues as well. And so far, after the record high levels have been seen, Eternal has now topped 3 lakh crore rupees of a market cap. That's higher than at least 20 of the Nifty companies as well, including the likes of Wipro and Tata Motors. So help us understand, when a retail investor looks at a Zomato, which is a new age stock completely, and none of us who are in the urban setup of the living and are used to of ordering so frequently from these apps of either e-commerce, quick commerce or food delivery, how does one really understand? We have been seeing in the recent past how the valuation picture came in. 300 zones have always proved to be critical for Zomato. It's always faced resistance to go beyond this. Now the stock is again moved up. We've seen some earnings celebrations come in. How does one really understand Zomato, the way it's going forward, and vis-a-vis some of the other companies that are superseded in market cap now?
Sakshi, if you have to interpret these kind of business models with conventional wisdom, uh, one would miss the opportunity in these kind of business models. These are all new age businesses, and uh, right now the focus of these business models is capturing the market cap and bringing the consumers to use their platforms. It can be in terms of the quick service, or it can in terms of the e-commerce business is concerned, the food delivery business is concerned. That's where these business models are getting habituated to people at this point of time. Of course, the urban Indians are completely utilizing the services, the platforms are concerned, whereas the tier two and tier one cities, the semi-urban, also getting into these kind of platforms, food delivery businesses, and the quick commerce, just sitting at the home and getting the things in front of you within a span of less than, by the time you take off your car from the parking and going to the merchandise, to the vendor, by the time getting the things at your doorstep is completely changing the perspective of the way one can do the shopping. That's where the Zomatos and the Swiggies and the quick commerce kind of businesses are taking the penetration of their business and occupying the paramount stage of the consumer behavior. That's where these companies are could able to get the edge of the customers. Coming to the financials, once the stock get listed on stock exchanges, market always look for the profitability. Yes, as you rightly mentioned, the revenues went up, but the profitability taken a toll. This is what the conventional wisdom tend to fail to give the targets for these kind of stocks. And look at the way the saga of different broking companies and research houses, how upgraded the Zomato target prices are concerned about 300. That's where the buying interest is coming. Coming back to their business models, these business models are have ample opportunity. They have the leverages in terms of the technological leverage, and their variable costs have been coming under control at this point of time, and the operational leverages. That's where the Zomato and these kind of technology based food delivery business or quick commerce grocery delivery businesses are concerned. That's where they're taking the edge at this point of time, Sakshi. If the investors, and we have a duopoly, okay, that's where the advantage. There are not too many players, and nobody want to enter into these businesses at a immediate basis. So that's where the Zomato is taking the advantage. Most probably, if the company could able to knock the profitability at a sustained knock, profitability, in the coming quarters. That's where the edge these companies are going to enjoy because of their market share, and also as the disposable incomes of Indians is going to go up. These kind of business models, these are the proxies for a young nation. That's where Zomato is taking the advantage.
Sure. Mr. Bathini, some more earnings that have just come in. Let's talk about Z Entertainment Enterprises that came out with its earnings just now, and it reported a 22% uptick year-on-year growth in its consolidated net profit that has now come in at 144 odd crore rupees vis-a-vis 118 crores in the same period last year. Revenues from operations, however, have declined by 14 odd percent to 1825 odd crores from 2130 odd crore rupees. So that's a dip from the previous year. Now, of course, PAT or the profit after tax is attributable to the shareholders declining 24%, sequentially. That's something that we can keep in mind of as well. Revenues have also seen a sequential 16% drop as well at this point in time. Segment wise, if you look at the difference, the drop in overall revenue was actually triggered by a significant both year on year and sequential drop in revenue from other sales and services segment. Advertisement revenue, the company earned 758 crores. Again, that's a dip from last quarter and first quarter of FY25. Subscription revenue, there is in fact some dip, slight dip again on both accounts, and other sales and services have also come in sharply lower at 85 odd crore rupees vis-a-vis 360 crores in last quarter and 232 crores in the first quarter of FY25. Now, Mr. Bathini, for Z Entertainment, we've actually seen, troublesome periods also. Although the stock has actually recovered quite a bit from the last 3 months, it's up by 17 odd percent. But if we look at the kind of decline that we are seeing today after the earnings, it's again substantial, 5.5% lower in trade. How would you look at the stock after some volatile moves have been seen, troublesome period has been seen, so much of uncertainty that shareholders have faced?
Yes, actually, there was a lot of euphoria around the stock, but everything
Recording
got
stopped.
out at this point of time. The results are not enticing at this point of time, and also the overhang about the management. These are the key speed breakers for G Entertainment. There are some better companies and better stocks are available at this point of time, even though the valuation seems to be attractive, but given the kind of looming uncertainty with respect to the management and all, I try to stay away from G Entertainment at this point of time.
Okay, that's the one that Mr. Bathini is staying away from at this point. We'll definitely keep that in focus. Apart from this, I also wanted to get a sense on one of the pockets, Mr. Bathini, and that's the cement stocks. What is fueling the recent rally in cement stocks? They're all up by over up to 8% in trade today. The rally started a couple of days ago with large caps moving in first, and now it's the mid caps names that are also moving in higher. What's the sense that you're getting? India Cement, Dalmia Bharat Cement, Deccan, you're looking at KCP, Ramco, all of these names, Saurashtra, many of these mid cap names, they have been in momentum. What would you say is happening in the cement basket? Is there a fresh wave of momentum that one should look at now?
Sakshi, the cement stocks, what we witnessed is, in terms of the business models are concerned, what we witnessed a complete consolidation with respect to the companies' businesses are concerned, both in south and north as well. And these stocks have been in a consolidation phase in the past 4 5 quarters. Now what we are seeing is some kind of a money because of the valuations looks attractive, and also as we are in the middle of the monsoon at this point of time, as the capex has been going up both in terms of the private capex, in terms of the public is concerned, public sector capex has been going up, infrastructure theme has been emerging quite strongly. So that's where some kind of a buying interest and cherry picking is taking place with respect to the cement stocks are concerned, cement companies are concerned. So if the investor is really a long-term investor with a horizon of more than 2 3 years, definitely we can see value in the large cap cement stocks and who are the have the uh, good market share in terms of their business models are concerned.
Okay, fair point. Well, thank you so much, Mr. Bathini, for being with us on the program and helping us with all your views on the markets and various pockets that we've discussed. Hope to see you soon on another edition
Thank
on
you.
Business Today Television very soon. Thank you so much.
Thank you.
Thank you. All right, viewers, last 15 minutes to go in the markets, and we are now joined by Mr. Raghvendra Singh, market expert, also joining in to share with us his views on the overall markets, a strategy that you must follow. Raghvendra, warm welcome. Good afternoon to you yet again. Now, help us understand, first on some of the stocks that are coming up with the earnings, and then we can take an overall market view later. One is M&M Finance that just recently came out with the earnings about 10-15 minutes ago. Now, wanted to understand that on the profitability figure, there is an uptick of just about 3% or to 530 crores. NII, however, has risen by about 20% year on year. The stock is just up about 1%. It went up in a spike, but then has also seen some profits being taken off. A lot of finance companies are coming up with the earnings, but what are the charts of M&M Finance telling you?
As far as chart is concerned, I think M&M has given a very strong breakout of above 260. So I'm
Okay.
expecting 270, 272 is there on the card. One can definitely buy with the stop loss of 255 for the target of 275.
Okay, got that. I hope M&M Finance viewers, you've got an understanding of how to look at it. Let me look at one of the recently listed stocks then, Schloss Bangalore. Leela Hotels parent company that has also posted its earnings, the first earnings that they posted after the company has got listed. The net profit has come in at 34.87 crores as against a 10 crore rupees of a net loss that was seen in the first quarter of FY25. Now, revenue from operations have risen by about 21% year on year to 93 crores, and EPS has now come in at 1.17 rupee per share. I know limited charts for you to study here, absolutely, Raghvendra. Leela Hotels, it's right now at 450. When it had come in as an IPO, a lot of analysts had pointed out the steep valuations that it was getting listed at. And of course, people talked about how these premium valuations will be difficult to sustain, keeping in mind that you have similar and better pedigree of stocks in the same category at much lower valuations, say an IHCL and others as well, which have proven. But how would you look at the stock now? It also gradually improved in the last 1 month. Will it have the wherewithal to move further?
I think stock potential to touch 480, 495 level. Sakshi, I think 440 is the stop loss. One can definitely look for buying on the higher side. So 455, 450 is the range from where one can definitely buy for the target of 470, 495.
Okay, got that. So that's the Leela Hotel stock that you could probably look at, or Schloss Bangalore as it is called. Let me pull up a few more stocks that one can definitely focus on in today's trading session. One space that I wanted to focus on, Mr. Raghvendra Singh, is the defense space yet again, HAL, BEL. After some time of consolidation, these stocks are again showing us some up move from yesterday. Any suggestion on this one?
No, Sakshi, I don't think defense stock is going to perform well in the next 15-20 days because we have already seen a very good run up on the in last 15-20 days. Now most of the stock have already corrected 10 to 15%. Now it is time to avoid them, wait for some more correction, then definitely one can buy it.
Okay, got that. Let me just look at a few stocks from the basket of Nifty 500 names. We have a lot of names that are hovering higher. India Cements we marked out. Chemfab Alkali is also up. Sambhav Steel Tubes another 8% higher. It has been consistently moving since its IPO. We have McLeod Russell, SML Isuzu 10% higher. We also have names like Eternal, we've already marked out for our viewers. Tilak Nagar Industries, that's an interesting one, 14.5% higher. It's moving very, very strongly in trade as well. I think there are some reports that are actually suggesting that there could be an Imperial Blue buyout, that Tilak Nagar Industries could be a front runner for. That's why this stock has moved up 15% odd in trade today. Of course, these are unconfirmed reports, viewers. Neither the company has informed the exchanges, nor do we have any source-based information to share with you. But media reports that are indicating that possibly Tilaknagar Industries, the maker of Indian-made foreign liquor, is higher because there are reports of a potential acquisition of Imperial Blues whiskey brand, coupled with the company's plans to fundraise also. All of this is, behind this fresh uptick. Tilaknagar Industries for you, Raghvendra ji, how would you look at the stock?
Sakshi, the stock have already performed well in today's trade. We have already seen 15-20% on the higher side. So my risk reward is not that much favorable. Overall volume is good, but I don't think this is the time to add this stock. Better to avoid this, wait for some correction, then definitely one can enter into this stock.
Okay, wait for clarity. No need to immediately jump onto it. The stock has already showed a lot of momentum. So technically, there is no conviction yet to actually enter at these levels as well. Let me look at some of the other pockets that we could ask Raghvendra ji to suggest to us what exactly can be done.
Sakshi, Sakshi, there is
Yes,
one stock which we discussed immediately. SML Isuzu,
Isuzu.
right?
Yes,
Yeah.
yes.
So the stock has given a very strong breakout above 3400. Now hovering around 3600. It is a very good time to add this stock because all the indicators are showing very good positive sign and the volume is also good. So I think 3800 is on the card. One can definitely buy this stock with the stop loss of 3650 for the target of 3800 and 3900.
Okay, the stock can move up to 3800, 3900 odd levels as well. It's a great time to enter the stock, viewers. The stock is already up 10%, and the reason for this is that one can actually look at it because the company has come out with the earnings, and after that there has been this substantial jump on the stock, and Raghvendra ji believes that post the earnings this is a good stock to add at the current levels as well. Let me just reiterate for all our viewers as to what exactly has been the kind of results that have come in. This is after the company, just let me just read out the results, but remember the stock has already gone up about 100% in the last 1 month also, and that's something that you could definitely keep in mind too. Q1 PAT has jumped by 44% for the company, coming in at 67 odd crore rupees, and that's one of the reasons. Revenue has jumped by about 13.3% at 845 odd crore rupees, and Raghvendra ji believes that this could be a good entry point. 3800 to 3900 kind of a target is what he's recommending. Okay, let's actually focus on the brokerage houses and wealth management space, Raghvendra ji. We are seeing some wild moves here, opposite directions. Angel One is higher, 361 WAM is lower, whereas Nuvama, Edelweiss, they are continuing on the positive side. Any key stocks that you particularly like from wealth management space?
I don't think so, Sakshi, because I'm not, very much positive on these stocks because these are the very seasonal stocks. So
Yes.
better to avoid these stocks. Yes, definitely one can look for BSC. BSC is looking good. The stock has given a breakout above 2500. So I think BSC is looking very good on the chart. One can definitely buy for the target of 2700 with the stop loss of 2500.
Okay, fair point. I hope this has also helped you out. Let me also focus on the insurance space. Mr. Singh, how are you looking at the insurance basket? HDFC Life is up, ICICI Lombard, PB Fintech. Are you looking at any of these stocks?
HDFC Life, yes, definitely stock is looking good. Stock has given a breakout above 755, now hovering around 762. So I'm expecting stock to touch 785 in this expiry. One can definitely buy with the stop loss of 745. Apart from that, ICICI Lombard is also looking good. ICICI Lombard, one can definitely buy this stock also with the stop loss of, I think, the 1920. 1920 is the stop loss for the target of 2070.
Okay, got that. Okay, Raghvendra ji, it's 325. Let's focus on the market strategy now. Ahead of the weekly expiry, day after tomorrow, how would you expect the markets to trade? Any, specific sector or index that you are looking at?
I think Sakshi market is going to trade in this range. I'm not expecting any big move because most of the heavyweight stocks are trading in a range. Only ICICI and HDFC is hovering with the good positive note. So I think Nifty and Nifty can expire between 25,000 to 25,200 because this is the 200-point range for this expiry. Next week I'm expecting good bounce for 25,500 level. So hope for the best. We can definitely see higher higher rate on the 25,500 on the chart.
Okay, fair point. Any key stocks then, Raghavendra ji, that you are penciling in on technicals on charts? Where do you see momentum?
I think Kalyan Jewelers is looking good. Kalyan Jewelers 590 above. It is trading, and I think 620, 600, 10 level is on the card in this expiry. So Jewelers is looking good. And apart from that, I think Sakshi SDFC Bank is hovering around 2000 level. So I think SDFC Bank can touch around 2020, 2020 level, 2030 level. So these two stocks are looking good. And apart from that, there is one stock, Amitron. I think Amitron Electronics is the company which is trading around 770. It is a cash stock. So one can definitely book for this stock for the target of 900 and 1000 plus in long term.
Okay, got that. I hope viewers, you've all taken down all those stocks that you could look at. One more stock that is buzzing is Paytm ahead of earnings. And let's quickly look at this one as well. It's among the top movers in the F&O space as well. Any suggestion on Paytm, sir? It's already been up. I think if we look at Paytm charts, then we will be able to see how the buzz has been. 4% higher in trade today. Look at the last 1 month move. It's 20% higher. Last 6 months, 25% move has been actually seen on the stock. But most of this momentum has started in this last 1 month. How would you look at Paytm?
Success stock has already given breakout above 1020, and the stock has taken inverse head and shoulder breakout and cup and handle breakout. So I think 1020 is the stop loss. One can look for on the for 1100 plus target, 1120, 1155 levels. So one can definitely buy with the stop loss of 1020.
Okay, fair point. I hope this has also helped all our viewers, get a view as to how to look at a Paytm ahead of the earnings that are coming in. Any suggestion on railways pack, Raghavendra ji? Are you looking at this space at all?
No, ma'am, because there is no upside left in this stock at least for
Sure.
1 or 2 quarters. So better avoid this stock. Uh, all the railways and our stock, I think it is a time to avoid this stock.
Time to avoid this stocks, railways, defense. These are the spaces that you don't have to look at right now. That's something that Raghavendra ji has reiterated on the platform today. Let's look at all those stocks which have hit a 52-week high. Eternal, of course, we know it's at a record high. GMDC is up 5.5%. There has been a consistent momentum on this stock from last couple of days. Shree Cement, Dalmia Bharat both at 52-week highs. Schneider Electric is also higher. Vishal Mega Mart is also hitting a 52-week high. These are the stocks that are buzzing. Anything on the mining space, GMDC and the likes?
Definitely, Sakshi. GMDC is looking good. GMDC
Okay.
has given a breakout, and I think monthly chart already given a strong buzz. And I think it is three-step soldiers breakout. Now a stock is hovering around 460. So next target is 500. So one can buy with the stop loss of 440 for the target of 500 in GMDC.
Okay, got that. I hope this has also helped you out in understanding how to go forward. Thank you so much, Raghavendra ji, for being with us on the program and helping
Thank
us
you so
with
much.
the key stock ideas and strategies on the markets. Let's start wrapping up. A minute to go for the markets to go. 329 right now. You can actually see 25,062 on the Nifty, 24 to 29 points lower in trade. All the sectors, viewers, have slipped into the red in trade today. Even the financial services have now given up the gains. They are now trading down. This is despite a 4.5% loss on India Wicks. All the sectors close in the red. Media stocks top losers, PSU Banks, Realty, Pharma. These are the pockets that are lower in trade. Let me look at the top movers. It's Eternal, 10% higher. HDFC Life, Hindalco, up and about in trade. Let's look at even Titan, BEL. These are the stocks that are higher. On the lower side, Shriram Finance, Eicher Motors, Tata Motors, Jio Finance. These are the stocks that are not doing well. PSU stocks, of course, Coal India, BEL, ONGC, NMDC, they moved up. F&O, you had Eternal, Angel One, Paytm, that's 197 Communications, Shree Cement, that also moved up. On the downside, you clearly had 361 WAM, IRFC also, that's down. Canara Bank, AU Small Finance Bank, the top losers there. And there you have it, 24 points of a loss on the Nifty, right now at 25,066. So after beginning the week on a positive note, we've again seen the markets, dwindle quite a bit in trade today. Let's see and hope that, for some of the earnings that will come in today in the evening are able to prop up the markets yet again. So let's hope and find that out tomorrow. But do stay tuned on to Business Today Television. Even beyond the market hours, you can see a lot of coverage from the world of business and finance continuing on your screen. Stay tuned.
Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. In our special series of Q1 earnings, we continue to cover performances that have the ability to change your portfolio's landscape should you have those stocks in your wealth